Investing in index funds is a simple and effective way for beginners to start building wealth. These funds provide a diversified portfolio of stocks or bonds without the need for constant management. But have you ever thought about why index funds are hailed as such a great investment option? In today's video, we're going to talk about a simple way to make money called index fund investing. It's perfect for beginners who want to get rich but don't know where to start. So, let's break it down and learn how to make your money work for you without all the complicated stuff. Are you excited to learn how to grow your wealth effortlessly? Let's dive right in and discover the magic of index fund investing. What is index fund investing? Index fund investing is a simple and effective strategy suitable for investors at any experience level, whether they're just starting out or have been in the game for a while. In essence, it entails investing in an index fund, a type of financial product that offers immediate diversification by providing exposure to various assets. An S&P 500 index fund mirrors the performance of the top 500 companies in the US. By investing in such a fund, you essentially own a small portion of each of these companies, which helps spread out your investment risk. It's a straightforward yet impactful method to construct a well-diversified investment portfolio without needing extensive market knowledge or constant supervision. The main advantages of index funds. One of the biggest advantages of index fund investing is its passive nature. Unlike actively managed mutual funds, which rely on fund managers to handpick investments, index funds simply track the performance of an underlying index. This passive approach typically results in lower management fees compared to actively managed funds, which can eat into your returns over time. In fact, the average expense ratio of an index fund is around 0.06%, significantly lower than the average mutual fund expense ratio of 0.68%. By minimizing fees, index funds help you keep more of your investment returns, maximizing your long-term wealth growth. Another key advantage of index funds is their ability to provide broad market exposure. Since index funds aim to replicate the performance of an entire market index, such as the S&P 500, they offer instant diversification across hundreds or even thousands of companies. This diversification helps reduce the impact of individual stock volatility on your overall portfolio, making index funds a more stable and predictable investment option. Additionally, index funds are highly transparent, as their holdings are publicly disclosed, allowing investors to know exactly what they're investing in at any given time. This transparency builds trust and confidence among investors, further enhancing the appeal of index fund investing. Risk and volatility. When delving into the world of index fund investing, it's vital to grasp the concept of risk and volatility. Despite offering stability and diversification, index funds are not entirely shielded from the ebb and flow of the market. The prices of individual stocks within the index can vary significantly due to market conditions, economic factors, and company performance. This means that investors in index funds may encounter periods of unpredictability where the value of their investments fluctuates. However, it's crucial to recognize that fluctuations are a natural aspect of investing and should not discourage you from staying committed. By adopting a long-term mindset and keeping your focus on your investment objectives, you can navigate through short-term market turbulence and capitalize on the overall growth of the market. Setting investment goals. Before you start investing in index funds, it's essential to establish clear investment goals that align with your financial aspirations. Whether you're saving for retirement, a down payment on a house, or your children's education, having specific goals will help you determine your investment strategy and time horizon. Consider factors such as your risk tolerance, time horizon, and liquidity needs when setting your investment goals. Additionally, be realistic about your expectations and avoid chasing unrealistic returns. By setting achievable and measurable goals, you can stay focused on your investment journey and make informed decisions that support your long-term financial success. Creating a diversified portfolio. While index funds offer broad market exposure, it's essential to diversify your investment portfolio further to minimize risk and optimize returns. Diversification involves spreading your investments across different asset classes, sectors, and geographic regions to reduce the impact of any single investment's performance on your overall portfolio. In addition to index funds, consider incorporating other asset classes such as bonds, real estate, and alternative investments into your portfolio. By diversifying your investments, you can enhance portfolio resilience and potentially improve long-term returns while reducing overall risk. Implementing a dollar-cost averaging strategy. Investing in index funds using dollar-cost averaging, DCA, can be a smart move for steady growth. Instead of trying to time the market, DCA involves investing a set amount of money at regular intervals, like clockwork. It's like putting a little bit into your piggy bank every week, rain or shine. This method smooths out the ups and downs of the market, buying more shares when prices are low and fewer when they're high. It's a bit like catching fish. You cast your line regularly and reel in whatever the day brings. Over time, this consistent approach helps buffer against market swings and steadily builds your investment nest egg. So, even if the market gets choppy, you're still on course to grow your wealth one step at a time. Rebalancing your portfolio. Ensuring your investment portfolio stays on track is crucial for long-term success. This means regularly checking in on your assets and making adjustments as needed. Rebalancing, which involves buying or selling assets to maintain your desired mix, plays a vital role in this process. Let's say your stocks have performed exceptionally well compared to your bonds. In that case, you might sell some stocks and purchase more bonds to realign your portfolio with your target allocation. It's like tending to a garden, ensuring each plant gets the right amount of sunlight and water to thrive. By rebalancing, you're essentially pruning and nurturing your investments to keep them healthy and growing. It may seem daunting at first, but with careful attention and periodic adjustments, you can steer your portfolio towards your financial goals with confidence and resilience. Staying informed and adapting to market changes. Finally, successful index fund investing requires staying informed about market developments and adapting to changes as needed. Keep abreast of economic indicators, corporate earnings reports, and geopolitical events that could impact the financial markets. Stay connected with reputable financial news sources and consider seeking guidance from experienced investors or financial advisors. Additionally, periodically review your investment strategy and portfolio performance to ensure they continue to align with your goals and risk tolerance. By staying informed and flexible, you can navigate changing market conditions with confidence and optimize your investment outcomes over time. Index fund investing offers a straightforward and cost-effective way to build wealth over the long term. By providing instant diversification, low fees, and broad market exposure, index funds empower investors to achieve their financial goals with minimal hassle. Whether you're a beginner looking to start your investment journey or a seasoned investor seeking to simplify your portfolio, index funds offer a compelling solution. Remember, the key to successful investing is consistency and patience. So why wait? Start investing in index funds today and take the first step towards securing your financial freedom. Thanks for tuning in to learn about index fund investing. If you found this video helpful, don't forget to hit the like button and subscribe to our channel for more finance tips and strategies. Together, we can journey towards financial success. See you in the next video.